The U.S. economy is one of the largest and most influential in the world, with a complex web of industries, businesses, and individuals all contributing to its growth and development. As a major player in the global marketplace, the health of the U.S. economy has a significant impact on everything from international trade to individual job prospects. In this video for today, we'll take a closer look at the current state of the U.S. economy, including its strengths and weaknesses, and explore some of the key factors that are shaping its future. Let's get started. Over the years, it has been subjected to a range of external factors such as global economic events, natural disasters, technological advancements, and pandemics, all of which have had a significant impact on its performance. As of September 2022 records, the U.S. economy was experiencing both positive and negative trends. One of the most significant positive trends in the U.S. economy was the strong GDP growth. The United States economy experienced a significant rebound in the second quarter of 2021 after the COVID-19 pandemic-induced recession of 2020. This was characterized by a strong gross domestic product, GDP growth, driven by various factors such as robust consumer spending, government stimulus measures, and a revival in business investment. Furthermore, the unemployment rate was also on a downward trend, indicating a strengthening job market. According to the Bureau of Economic Analysis, BEA, the U.S. economy grew at an annualized rate of 6.5%, which was an increase from the 6.3% growth recorded in the first quarter of 2021. This growth was driven by robust consumer spending, which accounted for about 2/3 of the GDP. For instance, consumer spending on services such as travel, hospitality, and entertainment increased significantly as people resumed their pre-pandemic activities. Additionally, consumer spending on durable goods, such as appliances and electronics, continued to be strong as people adapted to remote working and learning. Another factor that contributed to the strong GDP growth was government stimulus measures. In response to the pandemic-induced recession, the U.S. government implemented various measures aimed at stimulating the economy. For instance, the CARES Act, passed in March 2020, provided economic relief to individuals and businesses affected by the pandemic. This included direct payments to individuals, increased unemployment benefits, and forgivable loans to small businesses. Additionally, the American Rescue Plan Act, passed in March 2021, provided further economic relief to individuals and businesses. After the pandemic-induced recession of 2020, many businesses had reduced their investment due to the uncertain economic climate. However, as the economy began to recover, businesses became more confident and began to increase their investment. This included investment in equipment, structures, and intellectual property. For instance, according to the BEA, non-residential fixed investment increased at an annualized rate of 9.9% in the second quarter of 2021, driven by investment in equipment and intellectual property. While the U.S. economy experienced a significant rebound in the second quarter of 2021, there is a growing concern that the economy is facing financial instability in recent days.
And basically saying we have all the tools we need to fight any kind of financial instability, so we're going to be focused on inflation. Inflation keeps surprising to the upside. And this is where really, you look at UK this morning coming out with another hot print. This is the conundrum, and it's not that different for Jay Powell.
This instability has been characterized by rising inflation, supply chain disruptions, and mounting debt levels. Number one. One of the most significant concerns facing the U.S. economy is rising inflation. According to the Bureau of Labor Statistics, BLS, the Consumer Price Index, CPI, increased by 5.4% in July 2021, the highest increase since 2008. This has been driven by various factors, including supply chain disruptions, rising demand for goods and services, and government stimulus measures. For instance, the pandemic-induced disruptions in global supply chains have led to shortages of some goods, such as semiconductors, which have driven up their prices. Additionally, the government stimulus measures, including direct payments to individuals, have increased demand for goods and services, leading to price increases. Number 2. Supply chain disruptions are another major concern. The pandemic-induced disruptions in global supply chains have led to shortages of critical inputs and materials, leading to production delays and increased costs for businesses. For instance, the shortage of semiconductors has led to production delays for various industries, including the automotive industry, which has had to reduce production levels. Additionally, the disruption in the global shipping industry has led to delays in the delivery of goods, further exacerbating the supply chain disruptions. Number 3. Mounting debt levels are another concern facing the U.S. economy. According to the Congressional Budget Office, CBO, the U.S. federal debt held by the public is expected to reach 102% of GDP by the end of 2021. The rising debt levels have implications for the U.S. economy, including higher interest payments on the debt, which could lead to reduced government spending on critical areas such as infrastructure and education. First, rising inflation could lead to reduced purchasing power for consumers, which could reduce consumer spending and business investment. This could further exacerbate the supply chain disruptions, leading to reduced economic activity. Second, the supply chain disruptions could lead to higher costs for businesses, which could lead to reduced profits and lower investment levels. This could lead to reduced job opportunities and slower economic growth. Also, the mounting debt levels could lead to reduced government spending on critical areas, such as infrastructure and education, which could have long-term implications for the country's economic growth and competitiveness. But if you're thinking that this is the sole problem of the U.S. economy, you were wrong about it. The U.S. economy also faces banking problems.
Basically here that we have a banking regulation crisis causing a banking sector crisis, which is the idea that you've got a dearth of supervision and examination that are shaking markets' confidence in the sector.
These issues include bank failures, financial fraud, and inadequate regulation. One of the most significant banking problems facing the U.S. economy is bank failures. Banks are a critical component of the economy as they provide the necessary capital to individuals and businesses to support economic growth. However, in recent years, the U.S. has experienced several bank failures, which have had adverse effects on the economy. For instance, when a bank fails, it can lead to a loss of confidence in the banking system, which can lead to a reduction in lending and investment, further exacerbating the economic problems. One of the leading causes is inadequate risk management practices by banks. For example, banks may engage in risky lending practices that can result in significant losses. Additionally, banks may also invest heavily in high-risk financial products such as subprime mortgages that can lead to substantial losses. Moreover, the lack of proper regulation can exacerbate the problem by enabling banks to engage in risky practices that are detrimental to the economy. To address these banking problems, first, there needs to be an emphasis on effective regulation of the banking sector. Regulators need to ensure that banks are operating in a safe and sound manner, and that they are accountable for their actions. Additionally, regulators need to ensure that financial products are simple and transparent, making it easier for investors to understand the risks involved. Banks need to provide clear and concise information about their activities, making it easier for regulators and investors to monitor their operations. What do you think about this topic? Share your thoughts in the comment section below. Don't forget to like, share, and subscribe. I'll see you in the next video.